So for the last session of the day, we're going to have a panel discussion all together. And on stage, I'm going to be welcoming three different panelists. The first one will be Josh Jeffries, Head of Agile Practices at N26. Please join me. We're going to have Tanner again. Thanks for staying with us. You know him. I don't need to introduce him again. And Christian Valerius, who's technology strategy consultant for banking and capital markets at DXC Technology. Thank you all. All right, so how are we doing, first of all? Good?
Very well, thank you.
Good. I think the way that I would like to start this conversation is by realizing that, you know, after today, it's very clear to us that we seem to know the answers of where this digital transformation, this journey is going to. The only thing that differentiates from one organization to another one is the execution. How it's being applied, the different culture that you want to enforce or not enforce, but maintain at least. I mean, just a couple of thoughts. I think I was really surprised by Nick not being able to answer what kind of agile methodology they're using in their organization, which leads, by the way, to the question of what really distinguishes agile with chaos, I suppose. I was also really surprised by a comment from Cal, who was saying basically that he didn't like the term transformation, which I tend to agree with. I think it's not so much of a transformation. I think this is what I tried to explain this morning in the introduction, that we're not talking about a revolution. We're just talking about the next evolution, basically. And so more than transformation, I see more an endless journey, so to say. But still, this is the topic that we want to cover today. So why is this journey towards data-driven organizations so essential, so critical for all the players in the market, really? We don't want to focus specifically on the incumbents, but really all the players. And so I suppose the first question that I would have for you guys is, you know, this topic of being data-driven has been, you know, at the center of everything for quite some time now. And so today in 2023, if you start thinking about that now, aren't you late to the party already?
Yeah, I mean, I would probably say yes, but I'm also intrigued as to understand how any organization can have goals or targets or understand what it is they want to achieve without understanding data and the success that they're trying to drive and how they're measuring that. So a bit like you were mentioning before, whether it's a transformation to being data-driven, I'm not sure. Whether adopting different frameworks or methodologies and understanding how to kind of cascade objectives, things like this. There are new things that I think it was mentioned in the blurb about OKRs and things like this. I think this is probably the practices that people are adopting, but they must have had some sort of data to track success, essentially.
All right. Also, I mean, in my team, I mean, we are approximately 300 people, and my team, I have 0 people manager. So the main reason is the market is changing so fast, and you have to keep building iterative development. And for us, our product managers or product owners are the CEO of the products, and their main responsibility is not orchestrating the agile methodologies or best practices or so on. Their main responsibility is driving the innovation. Innovation is the combination of new idea or invention plus monetization. If there's no monetization, there's no innovation. This is why, to be able to discover opportunities for them, they have to ingest different discipline of data, such as new technologies, trend, market research, competitor market intelligence, internal feedback, customer feedback, digital analytics, and so on, which drives the agile way of iterating the innovation. And then we can follow the agile methodologies to be able to deliver that project management. So this is why I see data-driven organizations are crucial for these days.
Mm-hmm. Maybe I I'm even a little bit more provocative here. Are we already working in data-driven organizations? We are here in a small team of experts. Yeah, we saw brilliant things. You explained what kind of data we have. In reality, you're talking about agile methodology. When I go back to the shop floor to set up programs or whatever, okay, the first 60% is a discussion which agile, okay, is it scaled agile or whatever. Then what model you take, the enterprise model or the one. So rather than focusing on outcome, like Amazon would say, they do it backwards. Like, what is the outcome? Okay, we start very theoretically, very European, very academic on data, without, let's say, thinking of the output. What is it we want to achieve? So I'm really provoking here. Are we already working in data-driven enterprises, or is this something which is still at it in its early days? And coming to the question of so what is it a data-driven enterprise will benefit? From my experience, and maybe in this panel, I'm bringing a little bit the management, the account management, the program management view, is that it takes horrendous amount of time until you have the participant in a project even lined up of how you want to work together. Rather than thinking, what is it we can learn from the data? Tanner, I liked your chart where you said, okay, what kind of data you have, and besides the how the age and the profession and the insurance, also you see the behavior. Is the banking happening at night, in the morning? Are they doing a lot of small transactions, big ones, or whatever? And I think the thinking process on our side, on the banking side, is not yet driven by what we want to achieve. We always think, maybe, how can we monetize it? How can we get data out of it? Maybe nothing. Maybe just make the client more happy. I liked what we heard about customer satisfaction. Maybe when I log in, when I do it, I'm greeted with something what is relevant for me. Okay, so I'm not only sure whether we should look at revenue, but also at client satisfaction. You can do so much more to satisfy the client, but this would need a different view also in thinking, and not only put the word agile about it and then do, I don't know, sprints and epics and stories, but also think of what is it we want to achieve.
I think I really like this topic, and I want to explore this a little bit further, because I mean, at the end of the day, again, what is the definition also of a data-driven organization? Is it just about having the data? I'm sure we all agree the answer is no. Because having the data is good. Obviously, you need the data, but producing insights and outcome out of that is should be at least the ultimate goal. And so, again, setting up a data-driven organization is, as far as I'm concerned, should be only the baseline, right? This is just the beginning of the journey. And how do you go by actually to set up the right organization? You have the data, and then you want to produce something with that. How do you go by with that?
Maybe I can start, okay. So Tom Siebel has a great book named Digital Transformation, and he's giving very good examples over there. Like whenever, especially for the traditional companies, whenever they would like to be data-driven, they are starting $1 billion of project of building huge data lakes and then, data technologies and so on, which are taking approximately for General Electric's 5 years. And in end of the 50 year, you are realizing that, oh shit, it's not going anywhere. So this is why, I mean, being data-driven doesn't mean that how much data you have and how organized they are or your foundational. So data and digital transformation and also data-driven decision-making is not something that you can orchestrate top-down. It should happen bottom-up. And you don't need big data lakes for that. You should start with the data puddles, use case-driven data puddles, and you should use the data for your decision making, which is going to make you drive to seek new data for giving more accurate decision makings. So this is why, I mean, I see that thing like, instead of having more data, having less, but actionable data is more important for the organizations.
And thinking out of the box, not necessarily the direct know your customer data are important, but also behavioral things, with whom they work and all this stuff. So to think a little bit out of the box, like Google predicts traffic jams. They don't ask the cars, do you have a traffic jam? They just follow and see, obviously, the average speed is low. There are also indication in the banking area where you can derive from other data, weather data, match data, football or whatever, behavior, banking behavior, which should be taken into consideration. My experience is this is unheard of, unless maybe in your big thinking. But I'm working at the moment for a smaller bank. We would never think out of the box like this.
I think from my perspective, going back to what you're saying around like top down or bottom up, I think it has to be a combination, right? If you're going to be driven, it has to be coming from the organizational level. Where do we want to go? What do we want to achieve? And then asking the teams, they are the ones who know the best. How do we measure that? So UX, working with product, working with the front end engineers, how are we actually going to track this, iterating on it, improving the data, learning and continuously building the data, as you said, like not just trying to scrape it all together. But obviously you can do a bit of research to start with and things like this, but actually once you're shipping things, then you really start to learn the user behavior, the problems that they're facing. And yeah, that would be my sort of approach to being driven by the data.
And maybe I can add to this. You also must be willing to accept that your anticipated outcome is not the right one. So, I mean, maybe you think in your house credit ABC is the best product you have, and everybody believes this. Is this really supported by data, or is this a perceived feeling? I have two examples recently where everybody thought, no, this is clear. This is our top, I don't know what to say, our top product, and it wasn't. It was just perceived that this was the top product. The data didn't support it. But this means you need to be open to accept analytics from your data which are not matching your perception.
Yeah. I think to tie back to that as well, it also comes a lot with, I think people having a hunch that the next thing we're going to make is going to be the next big product. When actually, by understanding the data much better, you can actually prioritize things. And I think metricizing ideas in the early discovery phases is really, really interesting as well. So even if it comes down to like scoring feasibility or the risk or anything, it can drastically influence how you prioritize things. So yeah, getting the data as early as possible, I think is.
I think it was you, Christian, this morning, who was very interested into the adoption strategies in different organizations. I was just wondering if you guys have any best practice to share with us. Let's imagine that you act as a consultant with an organization. You're being tasked to take on this journey of implementing a data-driven mentality, culture. And I think that's a key word here, culture. How do you make sure that everybody's on board? Do you take another organization as best practice, as a success story, and tell them, look what this could be? Do you, I think you mentioned already, take this bottom-top approach, or the other way around, top-bottom? Do you have any insights here?
I can talk about how we did it. So I've been at N26 for 6 years, and when I first joined, they said they did OKRs, and I think you often see these frameworks implemented wrong, essentially. So, but going back to your question, I would just ask like what data actually matters, and get people to focus on those things. And in terms of how it's orchestrated, the way we did it essentially was we started as small as possible. So we focused very much on the product and engineering teams and tried to understand, okay, what's the best way for us to measure success and to create focus and to ensure that every team understands what their purpose is. And that enables us to give quite a lot of autonomy to the teams. So you mentioned, I think before, around like chaos and things like that, like having a framework where everyone's doing the same thing and having a stand-up will not make you successful. Like if you have clear accountability and a clear understanding and everybody has the same expectations of what to do, and you tell them, go and solve that any way you want, this is, I think, what was being referred to, right? This is what the teams will want. So yeah, in terms of implementation wise, we started small. We sort of did a proof of concept and we iterated every single time and scaled it amongst the product and engineering organization. Then the other functions, of course, got intrigued by this and were like, okay, how are you doing it? And then we just scaled it to the whole organization. And it was fairly organic, but the culture was around being accountable whilst at the same time providing autonomy for people. And yeah, the different layers of extraction were very important for us as well. So we have company level, then we have functional level, and then we have right down to team level. Some teams even have individual OKRs. So individuals in the team will have specific OKRs they're trying to drive, but we don't really make any of that beyond the sort of function. None of it is demanded or mandatory. And then the big thing is actually measuring stuff, reflecting on it, talking about it, making it part of your rituals and your meetings and the interactions you're having, because otherwise you can set these OKRs and off you go, you're doing a quarter, and then you set the OKRs again and you're going, hang on a minute, what happened to the OKRs we set before? And I see this quite a lot and no one reflects on it.
So basically you set up the vision and then you just let them be, more or less.
Yeah, having a line from the top.
That's interesting from the N26 perspective, because, you know, for you guys, it's a little bit easier, I would say, because you're relatively new in the market, which means that you can start with this kind of culture. I'm also interested in how do you go by from a set of culture and then you move to another one, the adoption of this new one.
A little bit to what I said before, when you kick off these ideas, okay, you need to de-incentivize the people talking about project plans and project hierarchy and who reports to whom and project governance, things which are very embedded in the organization of classic financial institution, you know, who reports to whom, what is the budget, and really encourage people, and I think I don't have to tell to you as N26, out of the box, and said, forget about it, okay? You are now here in team empowered with a product owner, okay? What is it you want, okay? And I think later on we will come to data privacy, okay? Forget about regulation, forget about what needs to be there. First of all, where we want to go, and then let's discuss what is practical possible, not vice versa, because otherwise you will be always limited by natural thinking. I'm not promoting to go out of boundaries, but I'm saying that first you should think out of the box and then come back to what is actually possible.
Mm-hmm. Yeah. Also, I mean, it's gonna be maybe another book reference, but also in which, I mean, it's explaining very nicely that if you try to become like someone into the market, it's very dangerous because it can cause to lose your identity.
Mm-hmm.
So you have to find your way of doing the things together with your team, and they call it as a bright spot for that team. And in one of the discussions, Christian Saving, our CEO, mentioned something like, you know, I mean, in the old times, there was a booklet in Deutsche Bank for the career booklet. And in the last page, there was a small mirror. And it was showing that Deutsche Bank is you. So this is why, I mean, doing it in your way, I think it is crucial. And if we need to segregate, like, you know, data-driven decisions and using the data for the customers. So I think if we need to segregate that for encouraging the data-driven decisions, I think instead of asking KPIs or just the numbers, asking the right question will help people to figure out how to become more data-driven. Instead of telling people what to do, asking the right questions is the crucial over there. Because whenever you ask the right questions, people will start thinking out of box, like Simon Sinek's, like, you know, I mean, what you are doing, how you are doing. So they're going to go out of that box and they're going to start thinking like why we are doing it. And when you start thinking why we are doing it, that's going to create a new perception that how can you change the market? Because one of the most mistake is we are looking at the data that we have and okay, what we can do with that. Okay, let's create a dashboard. Like, no, I mean, like, instead of looking at your data, you're supposed to think about what your customer needs, and to be able to solve that problem, what kind of data do you need? And what is going to be your data value strategy? You know, I mean, even for the contextual point of view. So this is why, I mean, as mentioned, like, data-driven decision and being data-focused should be encouraged by the top management, but that can be happening or transforming bottom up by asking the right questions to people.
Yeah, I think it goes a little bit in the same direction as what Josh is talking about, that you have to define the why, and then basically you just let them be, because you need to trust your people that they will ask the right question and then they will come up with the right solution at the end of the day. That's what
I think it also comes down to validating you're even working on the right problem. So like you could easily just give people problems to solve and things like that, but where it gets really interesting is when teams can understand that this is actually the right problem to be working on, because problem spaces are often so vast. Like understanding why that specific problem is the right thing to focus on now. And then, as I said before, then you ship something, you learn, it could be completely wrong, and you start something else, you do something different.
Sorry, also being data-driven is like a muscle. And it's a big muscle, you know, I mean, like, especially for the traditional family companies, high castles and the hierarchies. I mean, it's so important for the people, but if you have a muscle of being data-driven and if you can ask the right questions, you also start hiring the people who are smarter than you, that you can learn from them. I mean, even in my team, my management team, we are 9 people and 3 of them are my mentors. Because you're hiring those people because they are better than you in that area. And as long as you cannot empower them, as long as you cannot give them a freedom by asking the right questions and that they can use the creativity, so why you are paying that big money is for the people.
Yeah, so the culture will attract basically the talent, and then you have talent density. Okay, correct. Yeah.
At the beginning, you said something about, you know, do we need to bring all the data in a big data lake, big data, have, you know, all customers you have in one place? No, I don't think so. I think this will overcomplicate and slow down the process, but a good data platform, a good data analytics, a good tool set where you can play around with the data without any restriction at the beginning, you know, is helpful. Because I know from many experience, what you see is making you believe that you move forward. Minimal viable product. Can we get a very easy thing? Can we learn to write analytics by ourselves? Or do we have to go through some SQL scripting or whatever? Can we find this out? And there are nowadays so many tools in the market, okay, who can help you this to play around. I really mean play. I mean really play. Just try it out. This gives you so much energy to see, can we continue with this? And you don't need big data for this. And then you can say, what happens if we multiply by 10 the data? See whether they come out the same. But give this this experimental feeling to the team, empower the team to play around and not put already a timeline on it. What comes out of it? I think the outcome will be much more creative than if you do it in the traditional way.
I also think the foundational part of building that single source of truth is really, really important too, because if you have that, you can also train, you can basically scale the knowledge of individuals who can also play with the data. So they can go in and learn from each other, they can do scripts or whatever they might need to do to get the correct data, and then analyze it in their own teams. And even when it comes to like productivity as well, I often hear a lot about like velocity, story points, all this stuff. If you create a standardized tool for how you do work and you focus teams on having the same sort of size chunks, just measure lead time and cycle time. Don't need to worry about story points, velocity, all of this stuff. This is so helpful. It helps us a lot.
I fully agree with that because I'm coming from the mostly analytics background, analytics company. So as long as, you know, I mean, mostly the data is getting produced by the engineering teams, and then, you know, all these SQL queries and so on, you know, I mean, are getting built by the engineering teams, but they are used by products or business people. And as long as that they cannot deep dive, drill down into the data with the abstracted dimensions and metrics, it's just a dashboard. So as you mentioned, like, you know, I mean, if you have a big data, if you cannot reach the right data, it doesn't make sense. If you cannot encapsulate that right data with segments or something like that, right data doesn't make sense as well. If you cannot stream these segments to your first party or third party tools to get actions, also segments doesn't make sense. So that's a, you know, I mean, full life cycle that you have to walk through around of that.
There's another topic I'd like to come back to, because I think it's really interesting to empower the people, to trust the people, but at the on the other side of of the spectrum, we need to make sure also that, you know, at the end of the day, banks are highly regulated, and we need to make sure that we have compliance and everything. And so I think it was the example also of Starling that they were mentioning that they have engineers who understand bank, they have bankers who understand engineers. It's difficult, I suppose, to find such a combination of so many different expertise that you want to onboard. Because I think, Christian, you were saying before that we're not advocating for, you know, going outside the boundaries. I think that's very clear. And I think you, Tanner, mentioned that we should think of the use case and then let's look at getting the right data. So how do you find the right balance between chaos, I want to say, like you trust your people, but still make sure that you have some kind of control in terms of compliance, regulation, etc.
Yeah.
From our perspective, we get the people to really, like, we form truly cross-functional teams. So people from the first line, second line, even third line sometimes will be involved in the discovery process that we have. So the stuff I was talking about before, like validating problems, you get your risk people in the same conversation as your product people, and then they can understand, okay, we might be going this direction. Let's do a risk assessment. Let's understand, you know, where this is going. And you build that accountability in from the beginning, that they are a team and they are accountable all together. But also with the chaos thing, it was incredibly chaotic to do that. And actually coming back to sort of the first point we made was by having clear objectives and goals and having clear ways of measuring those things, this is where the accountability comes in and it stops the chaos. Because you can ask your teams, like, is this aligned with what we're actually trying to achieve? And they go, oh yeah, you're right. No, it's not. We need to kind of pivot a little bit, move in a different direction. But yeah, making people actually accountable for the data also is the most important way to stop the chaos, I think.
So I think one of the pitfall over there is, if you, I mean, for highly regulated areas, you have, you know, I mean, different functions, like from your IT application owner for the compliance of your applications to, you know, I mean, your compliance team to talk regulators, or at the same time, you know, engineering team and so on. So the complexity is growing. And one of the pitfall is putting more people to be able to solve that. So we just recently migrated one of our small services to cloud, and we had to talk with 44 different regulators. And putting 10 more compliance experts wouldn't make it faster. So it's like an analogy of, like, a lady can give a birth in 9 months, but 9 ladies cannot give a birth in a month. So sometimes more people will not solve your problem. So this is why I'm coming back to the same topic, like asking the right question to the people. Like, you know, hey, in which countries we can use that thing, for which countries it is not. If it's not working, what kind of, you know, I mean, on-prem connections we should do to sync. Well, these kind of questions drives people to talk with each other, and to talking with each other drives the innovation and the new idea. And like digital onboarding, like KYC and those kind of things. One day someone asked to his team, like, you know, oh, that's a very paper-driven process. Is there any way to digitalize that? Looks like a very stupid question, but that thing, you know, I mean, drives a new way of doing of onboarding, originations, or those kind of things, you know. So asking questions, I think, is the way of accelerating the discussions of the different people, which accelerates the innovation. Yeah.
I would like to come back to this staying in the boundaries. We had a pre-meeting and we talked about profiling customers, and to what extent can you profile customers? Can you identify customers to actually which identity it is or not? Okay, and in the projects, especially when I do this in banks, I'm observing that there is more energy put into, oh, we cannot do this, we cannot do this, rather than asking the right question and then meet a red line and said, okay, here is a red line, we cannot do this. Okay, maybe you use this with some obfuscated data or anonymized data, but then you can say, no, you cannot do this. But you could, for example, identify a group of people who works in this industry or whatever, so you can do this. But you need to allow a certain playground with protected guards and where you can try it out and then said, okay, this is a red line, we cannot do it. And you started the question by how can you make sure, let's say, that the people think in the right thing. Also ask questions or think about data which are not so obvious related to the financial industry. I'm thinking about sustainability data, ESG data, for example, okay? You can learn so much, you can derive so much, and you had this on your slide, I think to the very far right. You can learn so much from the behavior, yeah, inclusive of how much flight tickets you buy or whether you have bio products on your credit card, that make it fun to have these data-driven discussion. Keep away this school exercise feeling by what is it we want to learn? How can we make our client feel they are welcome, even at night? Okay. Welcome the client with something what is specific to the client, where the client feels this helps me without the bank trying to sell me something.
So again, what you're saying is that banks have a lot of data, they're just not using it today.
Yes, but it's gold. They are not not all banks. I cannot say this for your houses, but I can say that for the projects I have seen, there is a much more gold inside than it is harvested at the moment.
Yeah.
And one of the reasons is also the organization of the banks. You have a compliance department, you have an HR department, you have a customer relationship department, you have the transaction department, and hardly they talk to each other, at least not on an engineering or ideation level, but more on a formal level, okay? And harvesting these data, you would find them by combining them cleverly.
Yeah, and I would like to underline one thing. I fully agree, and experimenting in the new modus operandi. So as a senior management, also besides of asking the right questions, also being sure that the limits or the lines are drawn well, and then you are really encouraging for the experimenting the thing. So this is why I just want to underline that you mentioned. So
yeah. Going into this topic of data-driven organization, it's always very tempting to discuss also OKRs and KPIs. I think you mentioned OKRs. And there's like thinking out there that is basically saying that OKRs and KPIs are meant for rather long-term view because typically they're on a yearly basis. How do you make sure that if you set some targets, if you set some KPIs, if you set some OKRs, whatever you want to call it, some internal controls, how do you make sure that you keep this flexibility that you can adapt on a daily basis rather than making your people focus on where you want to be at the end of the year? Because I'm pretty sure we all understand that this is contradictory.
Yeah, I mean, as I kind of mentioned before, for us, it was very important to understand the different layers of extraction. So, for example, the company level objectives or the objectives and the key results, to be quite honest with you, could be for a 12-month period. The cadence on a functional level could be different. It's actually on a 6-month basis. And then within our product and tech and UX area, we then cascade that to the specific segments which are organized around user problems. And then we put those even further down to the teams. So the teams determine how they're going to measure themselves against the objectives that have been set by the organization, if that makes sense. So yeah, it's just very different at different layers. But the most important thing I think we've learned is talking about it and improving it and getting feedback and asking, does this actually add value? Because you can apply things blindly, but you need to initially understand, what are we trying to create? Does this make our organization more focused, if that's what we're after? Does it mean that we're doing less of this unplanned work that nobody really understands why we're doing it? So yeah, I would always ask organizations to understand, what do you want to achieve by having like a scaled goal setting framework?
Yeah. Also, a nice part of the OKRs is you don't have to always address just given objectives. So I mean, for example, if we are using OKRs, like, I mean, the bank has the OKRs and the divisions have their own OKRs who are contributing those. And in my team, we have OKRs. And each team over there, they have OKRs, and some of the objectives are directly addressing those key results or my team objectives, but some of them are their own objectives to be able to, maybe solve some technical debts or, move their forward. So this is why over there, I think there is a flexibility as well in the OKR structure, that it's not like a playbook or not like a scorecard. Okay, this is our goal, and I gave 50 to you, 30 to you, 20 to you. So it's more, I think, flexible best practice.
And the vocabulary KPI is also indicating in the wrong direction. You don't want to know key performance indicator, which already gives a wrong nudge into the thinking process.
Yeah. Another indicator, to say, is the return on investment. And I'm just wondering if you don't see that also as going against the very idea of agility. Because again, the return on investment is something that you calculate at the beginning of the year. You want to be there by the end of the year. And it removes this idea of you can adapt to the needs, to the market, because it could potentially impact dramatically also your return on investment. So do you just decide to completely remove the return on investment? Do you just focus on the revenue? Do you just focus on the needs and the rest will follow? How do you see that?
The calculation of the return of investment is already the key. I mean, if you make it obvious, potentially it will not work. But if you take side effects, what are you achieving by changing something, okay? And you do a more thorough analysis on how your investment will come back through what. Could be through customer loyalty and not through money directly. Then I believe I have no example where the return of investment and the, let's say, profitability of a project would not play a very important role. And I also think going further, this will not change. You still need to have business in mind. We are not living in a fantasy world where we can play around, and even your company as a disruptor maybe to the market, or the other companies we heard in the morning, okay, at the end of the day, there need to be a business model behind it. So I would not advocate, just play around for the sake of playing around, but I would say potentially the ROI to be calculated in a more clever way than just for that product, I get this return on investment.
I mean, return of investment, I agree. Return of investment is critical. But at the same time, from the financial point of view, how can you calculate is very limited. So it cannot be the only indicator, because there are so many intellectual capital effects, to your goodwills or to opportunity costs and so on. So I had a friend who is running lime mines in Belgium, and he was purchasing some small, how we call the lands, in very shitty areas. And all the consultants, like big consulting companies, KPMG, McKinsey, or BCG, they were always telling that liquid them. Because there is no return of investment from the financial point of view. But he has a very big opportunity cost over there, because when he buys these separate lands, he's blocking his competitors to build a factory over there because he's dividing the big lands. So now how can you calculate the return of investment of that investment, for example, financially? So it's very hard to calculate in these kind of cases. This is why it's a very important indicator, but not the only indicator, or not. There is no single way to calculate it.
Yeah, I think for us, we have so much flexibility in the teams anyway. It'd be very hard to know how much you've invested in a specific thing. But I would go back to making sure that every individual in that team knows exactly what revenue driver they are contributing to, so that it's not necessarily using return on investment as a metric, but the teams know exactly how they're bringing value either to the business or to the customer. And that's the way I would do it. We also played a bit with like cost of delay as well. I think that's sort of slightly different.
Yeah. Also, I mean, as a final question, maybe we've been talking about, the ideal situation as you set up the vision and then you just let them be. And so I guess my question is, what is that vision? what is the ideal bank, let's say in 5, 10 years? We all data driven, we all have the right technology in place. How do you see even banks? Because everybody keeps quoting Bill Gates. Do you only see banking and no banks at all?
Maybe I can answer as a traditional bank. So, I mean, our company is almost 150 years old. So the thing is, so many things are happening, you know, the tokenization economy, you know, the cryptocurrencies and AI and so on. So I don't know what's going to happen in 10 years, but what I know is only the ones who are agile to adapt new things, learning the things, questioning the things will be surviving. So I think only input that I can provide over there will be this.
So you don't want to predict anything?
I mean, of course, we are predicting so many different options, but end of the day, you know, I mean, the main capability more than a technology or the data, the main capability will be adapting.
I think for me, like the dream, I guess, is that everybody is totally like financially empowered and actually educated on how to use the right product at the right time for what they need. Like even if you're building like an investment product, does the average Joe in the street know exactly the best way to invest whatever money they have in the stock market, or is it just gambling essentially? And I see this quite a lot, but yeah, the dream for me is that everybody really understands how to use banking. And that's the benefit that we can bring.
I mean, Tanner had this quote from Bill Gates there, banking will be required. Will banks be required? The question is, what is a bank in 10 years? What is the definition of a bank in 10 years? Maybe it is what we today call a neobank or a fintech or whatever. I think it's more a question of how the word bank will go down in history over time.
Yeah. Fair enough. Do we have any final questions from the audience, maybe? Yeah.
Yeah, can you hear me? So it's really good that there's incubation of ideas, learnings, similar direction within financial services. What do you do outside of financial services to learn from either the failings in other industries or how some of the other industries have got a head start on the arms race around monopolizing data?
Like to start?
Not my sphere.
So it's very hard to give just one solid example, like, you know, okay, we have this financial product and we are making that much money because we are, at least from the nature of our business, we are very comprehensive, what we are providing. But what we do is from different divisions, like, you know, I mean, from private bank to corporate bank to investment bank to the wealth management, to be able to recommend really right products. We are using the data and enabling the data, empowering the data for that. So if you're an SME, recognizing that where you are going to be short in your money over there and providing you the right factoring, you know, I mean, opportunities over there that you can get some money from your account receivables and then pass through that kind of journey. So that's, I think, one thing that we can use the data, but more than the data, also ecosystem, as I mentioned, is important from different aspects to be able to collect different discipline of data. Yes, it's one thing, but at the same time, diversification of the products, because the banking products did not change in the last 150 years. So you give money, you get interest, and then that's over. So the way of doing those things changed, and ecosystem is helping you to diverse these products a lot. Also from financial inclusion point of view, even it's important because there are 2 billion people out there in the world who are excluded from the financial system. And with that ecosystem, you know, I mean, fintechs or different companies are customizing those products to be able to provide more personalized to the vulnerable populations or different populations from the financial inclusion point of view as well. So I believe like there is no single recipe to use data and make this happen, but for so many different areas, using the data and ecosystem will bring the success over there.
Yeah, so I also kind of mean, so we kind of give some examples. In the UK, you've got the digital utilities backbone that doesn't really understand the amount of gold that's running through its veins in terms of data, right? So it's well down the line. If you look at Auto and BMW Auto Drive, they're probably a massive exemplar of crunching big data every day that kind of puts the banks to shame in what they're kind of processing. But I agree, it's not all about big data. If you go into the sports market and what they're doing to capture data on players and measuring it and making very tactical, quick changes to what they're seeing against competitive players versus existing peers, are all ways of basically assessing whether the product is working in the right direction. So the question was more is, how much from, say, Deutsche Bank's perspective, are you looking externally outside of the banking world to see where the other industries, whether it's utilities or auto or retail or whatever, you know, have created some advancement that you could try and catch up on potentially, or avoid, right, where it's going wrong in the scenario of some of the utilities markets?
As a short answer, a lot. So to the external data and different discipline of data, from market data to the customer data or competitor market intelligence data. But I'm happy to answer maybe afterwards for the specific use cases, like, you know, I mean, which kind of data we are using for the decision making, because that's also a big area still. We would like to answer.
Any other questions? All right, then Josh, Tanner, Christian, thank you so very much.